Hi, good to have you on the show. This is Anisha this side. What's your view on the market right now? We were easily cruising around that 20,000 mark, headed for higher levels, and then suddenly back to 19,500.
Yeah, well, it's just a reflection of stuff happening outside India in terms of oil prices strengthening, as well as the US Fed being hawkish in terms of the interest rate outlook and their actions. I think these two tended to be a bit negative for emerging market flows, and India especially is very sensitive to oil. We import 85% of our crude, and hence any movement trend around oil makes a big impact. So I think beginning of September onwards, Saudi Arabia and Russia have been announcing production cuts. We have the winter coming over in the advanced economies, whether it's Europe or US, which means that heating demand from homes will be there for energy. So generally, a firmer energy situation is not so very positive for India. So some amount of short-term tactical hedge fund allocations have probably started moving out. And as we approach December, you typically have the hedge fund profit booking kind of a thought process, because they try to pay bonuses from cash profits. So these are the things which are leading to a little bit of uncertainty, and hence the markets could not capture the gains about 20K and have tended to pause. Because what's countered this is two things here. One is Indian economic news continues to be good. The only concern on the horizon, which will get clarified over the next few days, would be how did the September monsoon actually behave? Because till August we were below long-term average in terms of monsoon. So if September there was a reversal in good news, then again that supports it. If it was not, then a little bit around the RBI policy, which is due in October first week, that will create a little bit of tension. The other thing is that from an economic news perspective, I don't see any surprises. We are in a festival season. This time, remember, we have a slightly elongated festival season with Diwali coming in around mid-November. So to that extent, good news from consumer section, right? Consumer durables and auto and housing should be good news floating around. So that's good news for the markets. At the same time, politically, one has to keep sense on the fact that there are these state assembly elections, which are of key Hindi-belt states, which are provide a little bit of a clue in terms of the next coming parliamentary election. While I don't believe that they will have a significant impact, because votes will behave differently in parliament, the markets will be a bit sensitive if those elections don't go really the way of the ruling party at the center. So lots of stuff which can cause a bit of uncertainty. So I see that markets will be range bound, because for all of the so-called negative news from overseas, right, which I mentioned, you have the strong SIP book, domestic flows coming in and helping mutual funds and insurance managers to buy on these dips. So I think while the markets will be reacting to these flows, there will be a bottom line support coming in from domestic flows. So I would say that just be prepared for volatility, but not really any concern that we are slipping into any bearish stock market phase or anything like that.
Sunil, you're already planning for December, huh?
Yes.
We're in October, you're talking about December, planning your holiday.
We're not even in October right now. We're just at the cusp of it.
This is a typical fund manager, mutual fund CEO schedules like, by October, the eye is straight on December holiday season.
And we were trying to plan our Diwali programming and all of that. He skipped directly to the holiday season.
No, but coming back on that point, what is happening overseas? You must be obviously running such a large fund, keeping a very close eye. What are the strategic kind of, your team members who track macros very closely? Are they giving you any instances what happens to EM equities, or what has happened to EM equities 1 or 2 years after? Because last time this US yield level was seen 15 years back. So how many of us actually remember how EMs reacted when the yields remain elevated? So anything you can share with us, or it is okay to be cautious for a few months if that is the case right now?
See, I tell you, what is it? It's not the absolute levels of the interest rate which are so much a concern as the trend lines. You see, the market, you were telling me, ragging me about talking about December. See, the markets are always forward looking. They always discount the past and the present, right? What's there in the news is in the price. What's unknown is what it is. And the market was predicting a rate cut pretty soon next year. But today the Fed stock has pushed that. So it's a trend from the current level. It's not the absolute level. So 15 years back, this level. The point is the market has already discounted the current 4-5% interest rates in the US. Fine, done. Are you going to see that come down? Because that would have happened if there was a hard landing. So what the market now is thinking that there could be a soft landing or no landing, because despite the rate hikes, the news around broadly the US economy is fairly good, except for the fact that inflation is not coming down to the comfort zone of the Fed. So there is no likelihood of a rate pause, rate cut in the near future, because it's all now 225. So that's what has changed. And the reason for caution comes from the fact that market always willing to take a short-term spikes into that fold and go forward. But if you're seeing that whole of 2024, if you're seeing a kind of high interest rate scenario, that's where the fund managers are looking at it and saying hedge fund money, which is essentially leveraging of borrowed money there. Their margin of safety will come down. So to that extent, emerging market flows could be under pressure, and which is what we've been seeing for quite a few months. India was the last man standing. If most emerging markets had been getting outflows from 3-4 months back, India held down till end August. Right. It's only in September that we got a little bit of a shock in terms of outflows.
Yeah, not a little bit. 25,000 crore worth of shock is what we got in terms of the outflows. And you're right, 80% probability now that November will see a rate hike, which wasn't the case just a few weeks ago. But just wanted to bring Naresh also into the discussion, because in the last few minutes, last 10 minutes or so, there has been accentuated selling pressure that has come in. Look at the Nifty from that 720 mark, suddenly down 100 points and is now staring at 19,620. Ditto can be said for Bank Nifty as well. It's IT names which is actually putting pressure on the market. So Infosys has moved into the red. TCS, HCL Tech, TechM, these are the ones have taken a bit of a knock. Reliance, which was holding on to 1% of gain, that heavyweight too has kind of come off the highest point of the trading session. It's managing to hold in the green, but look at that slide that is visible on Reliance as well. And then the names like SBI, ICICI Bank, they're off the highs of the trading session. Naresh, what do you make of this U-turn?
So, like we discussed yesterday, there was reject volumes of CPSE and Nifty 50. And generally, last of the month sees in the last 20 minutes a lot of volumes from ETF. If we notice, we are seeing that happen across the board, whether it is Reliance or HDFC Bank. The volumes in the last 15 minutes are much higher than the volumes in the last 2-3 hours. So clearly an indication of some ETF reject sell volumes. Ideally, the trade has been to go long at 3:20 p.m. into the index and some heavyweights whenever this happens, and keep a stop loss below the previous day's low.
Sunil, you understand the NBFC space so closely. In fact, one of your group company, the big NBFC, very successful, was on our channel 2 days back talking of a very high quality kind of growth, sustainable growth going forward. And one of the few NBFCs which is trading at a 52-week high. But today there is a note from Axis which has triggered some excitement in M&M Finance and L&T Finance. And I want to ask you, this entire 7-8 top quality NBFCs, which phase of the cycle are we? Most of them are guiding towards 20%, 25%, some SME ones 30-35% kind of growth, which some part of the market is quite cagey on. You have exposure to a host of these NBFCs in your funds. Is it early cycle, mid cycle? I would
say it's early to mid cycle, because you see, as corporate capex goes up, banks generally come in at a late stage to finance. So a lot of the initial bridge financing, the loans against shares, the loans against real estate, right? In order to bridge the gap. See, promoters, when they are looking out for funding, they're hesitant to bring in the equity until the last stage, right? They would like to wait for that. Banks insist on that coming in. So you see that in the early stage of a capex cycle booming, it is the segment players like NBFCs, which have a quick turnaround time, and good quality NBFCs need to have the balance sheets to support these, and then the funding sources. These good quality NBFCs have access to medium-term funding sources, either through mutual funds or through retail deposits, right? So to that extent, right, the initial part of the credit cycle growth, right, will get led by this NBFC pack. And on top of this, right, the consumption, we are now heading into the festival season. We are heading into a summer, which will be consumer durables. It's an election season. So you'll have lots of liquidity flooding the economy. So the consumption drive is also on the back of NBFCs have a clear lead over banks in terms of lending at the consumer and the retail end of it. So I think that we are at an early to mid stage of a credit cycle, and the speed of turnaround, the ability to not get structured into your lending and do unstructured lending where you have good collateral security, like I said, either of shares or of this, is a good harbinger for the NBFC number. And I think the home loan, for example, has, despite the interest rate cycle, is not showing a sign of slowing down. The premium homes are actually going. So people are mentally looking at expanding their homes, bigger homes. And I think that's where NBFCs have a big significant part to play in it. And I think we are fairly bullish on quality NBFCs within the financial services space.
Bullish on the quality NBFCs which are there on the space, and those quality NBFCs are on the market right now to raise the growth capital, whether it's Bajaj Finance, whether it's Manappuram, or the latest being Chola. So all of these companies are gearing up for the next leg of growth. But